Meantime, let's move on to Amazon. It is sharply lower in the after hours off of its earnings results, down about 5% right now. Deirdre Bose has got the latest. Deirdre.
Hey, Melissa. So Amazon certainly performed in terms of revenue as the street was expecting. Demand is surging, but where it fell short, of course, is that profit. Costs are rising, too. And here it's worth repeating what Bezos was quoted as saying at the top of the press release. He said that under normal circumstances in this coming Q2, we'd expect to make some $4 billion or more in operating profit, but these are not normal circumstances. Instead, we expect to spend the entirety of that $4 billion, perhaps a little bit more, on COVID-related expenses, getting products to customers and keeping employees safe. So, Melissa, given rising labor unrest, there is a big push on Amazon's side to show that they are taking care of its workers, and that in turn will be good for the company if it can get more capacity back online and fulfill orders more quickly. Also interesting in the results, I want to point out physical store sales. These have really been muddling along, seeing growth of 1% or perhaps minus 1% year over year. Grew 8% this past quarter. Whole Foods makes up the majority of that. So their grocery ambitions finally starting to take a little bit of hold. And I just got off the phone with CFO Brian Olsavsky. He sounded optimistic on this business. The call kicks off at 5:30, but he also gave some more color on the media call that I just got off of. He said that capacity constraints have been easing, and they have actually hired the 175,000 workers already that they set out to hire. He declined to give numbers on total COVID cases at warehouses. So that was interesting because there's a lot of questions surrounding that, especially with another strike scheduled for this week, for tomorrow. The key takeaway, though, Melissa, Amazon is warning that it could lose money even as demand surges. But remember, it wasn't so long ago that Amazon was not turning a consistent profit. So you're seeing shares down about 5% in the after hours. It gained more than 4% today. It's still up about 30% year to date. Back to you.
Deirdre, thank you. Deirdre Bose. Guy Adami, I go to you first because you've been pretty steadfast in your call to sell this into the report.
I love that word steadfast. It's a fantastic word. And I use it all the time. It's one of my crutches. You're welcome. But, you know, one of the things we said, and if you go back and look, and one of the things we've been talking about is Amazon actually bottomed out a week or so before the broader market. And when things were going pear-shaped on March 23rd, Amazon was actually moving to the upside, and we talked about that quite a lot. What we've said is Amazon is going to continue to rally into earnings. It rallied 52% from that low print to the high print, I think, today, actually, and I thought it would give back. I still think you're going to have an opportunity to buy it at $21.70, and that's where you reload. This quarter, by the way, was pretty outstanding by just about any metric, including operating margins, which should have gotten crushed, and they still came in at 5.3%. So you got to tip your cap. But when Jeff Bezos, and I'm paraphrasing because I don't have it in front of me, when he tells shareholders basically to take a seat because it's going to be a wild ride, I'd listen to the man. You know, and I think you're going to get an opportunity. That's not negative about Amazon. It's just trying to trade the stock properly.
I mean, expenses were up all over the board when it comes to labor costs, when it comes to COVID expenses, and the mix also really challenged margins, and yet they were able to deliver. Karen, do you give Amazon credit for that? I mean, can you even see a point where you could say maybe this company has got it and maybe the valuation you can look past?
Yes, actually, maybe. I mean, I love that it's down, you know, after this extraordinary run. I do think that when they have had to sort of respond to the pandemic the way that they have had in such a short amount of time, I think that, to Guy's point, that they were as efficient as they were is kind of amazing. When they talk about hiring that many people, getting them on board, when they talk about trying to keep everyone safe that works for them, I know that's been the source of some, you know, discontent, and then thinking about how did they just deploy that massive amount of new orders, and they've been able to do it pretty successfully. You've got to think that even if it slows down somewhat on the revenue line, that they will also be much more efficient operating in the future, having gotten a little bit of time to sort of, you know, get people on board, get them to work efficiently. I'm really impressed, and I think that they will come out of this so much stronger. And you think the idea that they were willing to give guidance for the coming quarter and that the revenue growth is in, I mean, it was a wide range, but somewhere in the 20s they could fall in. That is extraordinary. And, you know, when you think about Whole Foods, what they've been able to do with that, I'm pretty impressed. And I think that they will come out much stronger on the other end.
I mean, calendar second quarter, in terms of giving guidance, Dan, that should have been a free pass for every single company out there. And yet Amazon chose to give guidance. I mean, that's pretty telling.
Yeah, and I applaud them in a way. I mean, it shows that they're actually bracketing what they think their business looks like, you know, from a base case to a best case to a worst case. So good for them. You know, I think it's important when you think about Amazon. I think Guy is correct about the ability to reload. I mean, there's just unusually positive sentiment in the name. When you saw it break out just a few weeks ago and just go straight higher, you know, you say to yourself, okay, this can't last like this. Mark Cuban last week on our show, I think he said it's going up. He didn't say it's going to come back a little bit. You know, stocks like this need to back and fill. Just make one point about 2019. This stock really did underperform for most of the year because of the spending that they were doing to get ready for, not ready for the pandemic, but their future literally lied with logistics. It lied with the ability to get people things in one day, that sort of thing. So ultimately, I mean, they're being rewarded for those investments. And I suspect if the stock does come in a little bit, then sometime in the future, that valuation will be rewarded again.